Imagine yourself as Rockefeller or Getty hitting the jackpot with oil. Let's fast forward to now because you're about to hit the jackpot with solar, wind power, and alternative energy. On today's ETF Battles, we've got a big league matchup between two clean energy ETFs. It's PBW versus QClean coming up next. Welcome to ETF Battles. I'm DeLegge. Season 2 is underway, and if you're here for the first time and you bumped into us by accident, what a wonderful mistake. Be sure to subscribe to ETFguide TV. Be sure to drop us a line. If you've got a battle request that you'd like to see, post it in our comment section below. You can also hit us on our Twitter handle at ETFguide. Now, one of the big changes for Season 2 that we've made is we've expanded the field of battle matchups to now include mutual funds. So if there's a mutual fund versus an ETF battle that you'd like to see, send it our way, give us those ticker symbols, and we'll consider it. Renewable energy is the fastest global growing energy source. It's also a mega investment trend. The next Rockefellers and Gettys are already being minted. Now, in the U.S. alone, renewable energy growth has jumped over 100% over the past few years, and the trajectory remains up. Renewable energy, also known as clean energy, includes solar, wind power, and hydropower, among others. And today's tussles between the Invesco WilderHill Clean Energy ETF, that's ticker symbol PBW, versus the First Trust NASDAQ Clean Edge Green Energy Index ETF, that's QClean. And ETFs generally fall into one of two camps, newer funds and older funds. And then we've got a third camp, which is ancient funds. And both of these funds would fall into that latter group. QClean was launched in 2007, PBW in 2005. That's many moons ago in the ETF marketplace. So which of these ETFs is the better choice for investing in the clean energy trend? Well, helping us to judge today's matchup is Dave Nadig. He's Director of Research at ETF Trends. We've got Todd Rosenbluth, Director of ETF Research at CFRA. And it's Dave's first time serving as a judge on ETF Battles, so a warm welcome to you, Dave. And of course, Todd has served as a judge on many episodes. It's great to see both of you.
Let's get at it.
Great to get at it. You know, in 2005 and 2007, Dave and I both had hair back then. That's how long ago this has been. These products have been around.
You're still hanging on, Todd. You're still hanging on.
I'm hanging on.
You still got a little bit of fuzz there. So my battle scorecard is ready. And we've got these 4 battle categories of cost, exposure, strategy, performance. And then the mystery battle category is one of my favorites. That's where you, the judges, get to pick that one factor or maybe multiple factors that you feel are important to today's matchup. And we're going to go through these, each of them one at a time. And then at the end of the show, I will declare a final battle winner. It could also end in a split decision. We'll just have to wait and see. So my battle scorecard is blank. And as you can see, that means it's ready. So we're going to go and start with the first category, which is cost. And Dave, we'll start with you. You got 30 seconds. Go.
All right. Well, the headline here is that QCLN should win. It's 10 basis points cheaper. It also trades at slightly tighter spreads, about 11 basis points versus 15. But, and it's a big one, it actually doesn't track its index nearly as well as PBW. PBW on an average year beats its own index by about 1.6%. Right now, if you look back over the last year, it's over 2%. That's probably from securities lending, but all those things come down to cost. So if we're just looking at that, to me, the clear winner here is PBW.
All right, that's a good start. Todd, how do you see it in terms of cost? Which of these two ETFs wins?
So I go with QClean. 10 basis points is cheaper. And as Dave said, the spreads are there. The index tracking, these are tracking 2 completely different indices. So I'm going to throw that out for now because I know we're going to talk about exposure and the importance of that in an upcoming part of it. So QClean is the cheaper of the 2 ETFs and what matters to us at CFRA.
Very good. And just to confirm, Dave, you chose PBW, correct?
I did indeed.
Okay, so we have 2 opposite opinions there so far. How will our judges look in terms of the other categories? Let's stick with you, Todd, for the next category, which is exposure strategy. Tell us your thoughts.
So these 2 ETFs offer exposure to a variety of sectors. You get consumer discretionary, you get industrials, you get technology. Ironically, there's very little, if at all, any utilities. But we'd be choosing PBW because it's more diversified at the stock level. let's use Tesla as an example. Tesla is a 9% weighting in the QClean product from First Trust, and just a roughly 2% weighting. It's more equally weighted. And especially if you're going with these long-term thematic strategies, we think you want to spread that wealth around instead of being concentrated in just a couple of stocks.
All right, that's solid analysis. How do you see it, Dave, in terms of exposure strategy between these two ETFs?
Well, Todd and I tend to see eye to eye when we get under the hood of ETFs, and this is going to be no exception. PBW has a great broad mandate. It's global. Its tiered weighting structure keeps you out of these incredibly concentrated positions. If you want Tesla, go buy Tesla. In this case, I think PBW wins.
Okay, very good. The next category is performance. And performance, of course, is the bottom line, but it's not the only line. Dave, you're still up. Who wins the battle in terms of performance?
So PBW has just straight out beaten QCLN by 90% over the last 2 years. Last time I looked, it was something like 400% to close to 300%. The trailing 12 months, it had been up something like 205 versus 183. It's really not even much of a comparison. And that's despite the fact that QCLN has a mandate and his own Tesla is part of it. So really, I think you have to look at PBW as the winner here.
Very good. How about you, Todd? How do you see it in terms of performance? Who wins the battle?
So I agree with Dave. PBW has outperformed. When we look over the 3-year period, it's outperformed by 1,000 basis points split. And when we look even this year, but let's just level set for a bit. The numbers Dave cited are just tremendous for both these products. You would have been quite happy up well over 100%. In 2020 with either of these products. So you wouldn't have gone wrong with which one you chose, but PBW is the winner if we have to do neck and neck, side by side.
Excellent. Now we shift to the mystery battle category where our judges get to pick what specific factor or multiple factors that they feel are crucial to today's matchup. So you're still up, Todd. What is your mystery battle category and who wins it?
So we at CFRA have research and ratings on about 1,900 ETFs, looking at cost, which we've already covered, and then risk and reward factors, including holdings, including performance records. Both these ETFs are 5-star rated to CFRA. So I'll give them a tie for this, but there are differences between them. To us, PBW has a stronger risk profile and QClean has a stronger reward potential. So it really comes down to whether or not, given the strong run that these products have had, do you want a little bit more risk mitigation or do you want a little bit more reward potential? But this is a tie to us at CFRA, both 5-star rated ETFs.
Excellent. Let's shift to you, Dave. How do you see it in terms of your mystery battle category? What is it and who wins it?
So my mystery category here is ESG-ness, which is a word that I just made up. Basically, which one of these funds, if you were an ESG investor and happen to be using clean energy as the way to express that, which fund is the better ESG fund writ large? And here I swing back to QCLN. According to MSCI, whose ESG methodology I tend to like the most, QCLN wins here with an ESG quality score of about 5.9 to 6 versus about 5.2 on its competitor here. And if you look at the sustainable impact companies, you get about 54% of those inside QCLN versus only about 33% in PBW. So if you're looking for ESG, at least on these metrics, it's hard not to root for QCLN.
Excellent. And for our audience wondering, ESG, that's an acronym for environmental, social, and governance. And as Dave pointed out, they're an important factor when looking at these types of funds. So we're going to shift now to your final overall battle winner. We're going to give each of our judges their final opportunity to weigh in. And Dave, you're still up. Who is your battle winner between these two clean energy ETFs?
You know, I think Todd's going to be real happy about this. I always have to come back to exposure. I think exposure is the most important part of any investment decision. I think PBW wins because I put so much more weight into exposure than I would into these other categories. Some years you'll win with that. Some years you won't win with that. But over time, I think exposure matters, and I think PBW wins.
All right. How do you see it, Todd, in terms of your overall winner? Do you agree with Dave's analysis?
Oh, I definitely agree with Dave's analysis in that PBW is the winner and that exposure matters. So the only category of the four that QClean 1 was the expense ratio. That's just 10 basis points. It's underperformed. It's more concentrated in a handful of stocks. And from a risk standpoint, there's greater risk that's there. So we would put PBW as the winner, but these are two strong funds. I think these are right for us to be able to have side by side as investors are looking at clean energy ETFs.
Well, this was a great matchup, and we appreciate you judges weighing in. And I didn't know how this particular battle was going to go down. I mean, we started out with two judges looking like moose with their antlers interlocked during mating season. But then you guys kind of came apart and agreed overall on the analysis. And so today's battle winner, according to my scorecard, is PBW. That is the battle winner. Now, you guys agreed in terms of the overall battle winner. You did disagree, though, in terms of the cost, but you did agree in terms of performance and the overall battle winner. The mystery battle category was a split. And so excellent analysis, judges. We appreciate your takes. And a couple of key takeaways before we finish off today's show. Exposure matters, as we learned there. Also, clean energy ETFs offer an affordable and easy way that's diversified to invest in this mega trend of renewable energy. And speaking of diversification, the only people that don't need to diversify are those who are 100% correct all the time about every single trade they make. Well, we hope you've enjoyed today's episode of ETF Battles. Be sure to hit us up on our Twitter feed at ETFguide. Also, if you'd like to see a specific ETF battle matchup or mutual fund, post it in your comment section below. Give us those ticker symbols and we'll look at them. I'm Ron DeLegge. Thanks for watching ETF Battles. And until we meet again, watch the battle before you invest.